Thank you very much for joining our webinar this morning. Just before we start the webinar itself, I'm going to give it another 15 seconds just to let some people join. Typically, whenever we set these events away, it takes a minute or two for everybody to join the event. For those of you who don't know me, my name is Alastair Wilson. I'm one of the tax partners here at MHA Tait Walker. I'm delighted to be joined today in terms of this presentation on making tax digital for VAT by colleagues from both our VAT team and also our business services and our data and technology teams. This event is going to present on a range of aspects of making tax digital, and so hence the multidisciplinary approach today. We're going to move on to the next slide, Sam. So in terms of housekeeping, I'm being assisted today by Sam Nicol, who will be helping us to move through the slides as we go through the presentation, but also there will be a Q&A session at the end of the webinar. If you've attended webinars that we've hosted before, you'll know that this is something where the chat function, which is at the top of your screen, enables you to post questions, and we will try and answer them. I say try because if it's a generic question, which is something which will apply to a range of people, we should be able to answer it. If it's something that's very specific to your circumstances, in view of confidentiality, we may say, look, we'll pick it up with you offline, we'll come back to you. But if you do have any questions which are generic in nature, please do, feel free to ask them. We had a couple of questions posted prior to the event, and one of them, for example, is, does this apply to charities? So something like that we'll cover in the presentation itself, but also we'll make sure that any of the, I suppose, pre-submitted queries are also answered at the end. If you can move on to the next slide, Sam. Just in terms of the presentation team today, we have Hydeam Sulton from our VAT team and also Louise Phillipps from our VAT team. We've got Graham Dutchin from our data team and also Richard Baker from our business services team. In terms of that multidisciplinary approach for this presentation, it's to try and cover the fact that HMRC have restarted a number of paused projects. They have started moving on with some of the things that they had wanted to do prior to COVID. But then because of the pandemic and because businesses, quite rightly, have got other things that have been occupying them for the last 12 months. So HMRC had to pause a range of projects. Now, those projects included making tax digital for VAT, this second phase. You may have attended a webinar recently that our VAT team ran on the domestic reverse charge, and also there's an upcoming webinar this week on IR35. Those are all projects that HMRC have now got well and truly back up and running. And just in terms of making tax digital for VAT, HMRC think there is an annual shortfall in terms of tax collected, and part of that comes from just errors in processing. And the annual shortfall that HMRC thinks exists, it runs, they think, annually at about £9 billion, and that's just from errors in processing. So in terms of where we are, in terms of the economic landscape, it's understandable why HMRC want to move forward with projects like this. If we can move on to the next slide, Sam. And in terms of an overview of what HMRC are trying to do with making tax digital, their ambition is to make the UK one of the most digitally advanced tax administrations in the, I suppose, the developed economies. They want digitalization to transform tax administration so that it's more effective, it's more efficient, hopefully both for the taxpayers and also for HMRC. And it's easier for taxpayers to get their tax right. Now, digitization is something that businesses in all manner of sectors are looking at, and so this should be part of what is a change strategy that businesses are looking at generally, because certainly if your experience of the pandemic has been anything like ours in terms of working remotely and trying to digitize things, it is something that, moving away from paper-based processes and spreadsheets, etc., it is a key thing that businesses should be doing. If we can move on to the next slide. And in terms of the timeline where HMRC are with making tax digital, it's not just VAT related. However, they have successfully implemented phase 1 for VAT back in April 2019, and many of you will be using things like bridging software to enable your VAT returns to be bridged into HMRC systems. Where we are going now, April 2021, which is phase 2 for VAT, which is around digital links, which obviously we're going to cover in detail. After that, phase 3 for VAT, where all VAT registered businesses must comply with making tax digital. Then in 2023, making tax digital for income tax will start to roll out, and that will be an area that you will see us talking about in future presentations, because it is an area that we're going to be working with HMRC on a pilot on. And then finally, making tax digital for corporation tax. The reason why that is last is because actually corporation tax, a lot of businesses are doing quarterly reporting already for corporation tax, so hence it's got less of an issue in terms of what is being reported. So you can see that there is a timeline at HMRC are working to. It will continue, and by the middle of this decade, you would expect that most tax processes will be digitized to a very large degree. We move on to the last slide of my section, Sam. So the purpose of this discussion is to highlight the key aspects of the compulsory digital links requirement for making tax digital, where those will apply to VAT returns starting on or after the 1st of April 2021. So that is effectively 5 weeks away. So it isn't long in terms of this starting point. So it's to enable you to identify the key actions that you should be thinking about and you may now need to take to get your business or your organization ready for those new rules coming into force. And with that introduction, I shall hand over to Hydeam Sulton from our VAT team, who will take you through the first section of detail.
Hi, good morning, everyone. My name is Hydeam Sulton. I lead the VAT practice here at MHA Tait. Can I get the next slide, please, Sam? So what we're going to cover today is an overview of the MTD landscape. So that's kind of a reminder of why HMRC has brought MTD in, confirmation that this isn't the end of the journey, and a bit of an insight into what might be coming over the horizon. I'll also give an overview of kind of what this current phase means. I'll also recap on digital record keeping requirements and digital submission requirements, which have already been mandated. My colleague Louise Phillipps will go into more detail around the digital links requirements, which is the key part of the changes coming in from the 1st of April this year. And then we'll have some insights from our data and technology team around some of the practical aspects of MTD, and then also our business services team will also provide some insights on kind of how we can assist you in kind of meeting your MTD obligations. Next slide, please. So kind of why is MTD coming? In terms of, to give a bit about my background. So I used to be a former head of tax professionalism at HMRC, and I was a subject matter expert on compliance and MTD. And in practice, when I worked in industry, was involved in the consultation around the MTD legislation and the drafting of the public notice. So I just want to give some kind of wider insights about MTD, so it makes a bit more sense as to why HMRC are doing what they're doing and where they might be going to. So the key driver around MTD is, as Alastair mentioned, there's billions of pounds each year being lost through kind of avoidable error. MTD looks to kind of prevent those avoidable errors. And also mentioned HMRC's ambition is to become one of the most digitally advanced tax authorities in the world. Now, from HMRC's perspective, these aren't hollow words. HMRC has invested millions in kind of its IT capabilities, its kind of predictive analytics tools, its staff. So it is definitely kind of a serious ambition from HMRC. And MTD is kind of a key pillar in HMRC's future digital strategy. So everything HMRC is doing is moving towards kind of digital. So one of the key things they've done is they've introduced a new IT system called ETMP, so Enterprise Tax Management Platform. Historically, all of their IT systems were separate and there was very little ability to look at a business holistically, so see what they were paying across all taxes, look at risks across all taxes. Now this new system is bringing all taxes into one place, making it easier for HMRC to see a whole view of the customer. One of the other changes within HMRC as well is they've moved from having essentially offices in every large town and city in the country to 13 key strategic locations. So there is kind of less offices there, which invariably means there'll be less done face to face. So there is a drive to do more stuff desk-based and do more things digitally. HMRC has also invested heavily in data and data analytics. So behind the scenes, HMRC has increased the amount of third-party data it gets. So now it gets things like automatic bank feeds, automatic feeds from the land registry and other third-party providers. So it's creating a wider holistic picture of businesses and the risks for businesses. And the key aim around all of this is kind of reducing the cost of compliance and driving efficiency. So using the data to predict where risks might lie, and also kind of moving towards a campaign-based approach. So it identifies a risk and then it can create a campaign and identify all the businesses that might potentially be kind of impacted by that risk. I think the key thing at the moment is HMRC needs to reduce the tax gap, because obviously with COVID and with Brexit and the amount of expenditure the government has, it does need to kind of recoup that through the tax system. In terms of HMRC's overall strategy, it's worth kind of highlighting the three key strands of that as well. So HMRC's compliance strategy has three strands, which are promote, prevent, and respond. So promote is about kind of educating businesses, helping them get their tax affairs correct. Prevent is around stopping kind of incorrect information getting into HMRC systems, fraudulent claims getting into HMRC systems. And this is where MTD is kind of a big part of that strategy, because the whole point of MTD and the digital links that we'll be discussing is to reduce error, to reduce kind of avoidable errors and stop those kind of being sent into HMRC. So transposition errors under MTD, you can't now kind of manually type things in. This is all about preventing kind of errors. And the final strand is about respond. So this is kind of where a risk's been identified, dealing with that. So it might be a compliance event, it might be a VAT inspection, and kind of at the moment, the only things that businesses need to provide is the 9 boxes of the VAT return. But going forward, kind of the expectation is HMRC will want more data and more real-time data. And to kind of get an idea of where HMRC might go in future, it's worth looking at what kind of other countries are doing globally. Can I get the next slide, please, Sam? So there's a big trend across all tax authorities in the world to move to digitizing their tax system, moving towards more real-time reporting, more kind of detailed reporting, so more than just the VAT return. And again, the aim's the same as what HMRC has. It's kind of reducing the cost of administration and kind of shrinking that tax gap and improving the compliance and compliance yield. So tax authorities around the world have done a variety of things. So there are countries like Spain. So Spain has something called SII, which is essentially real-time reporting. So you have to send daily your transactional data, so your accounts payable, your accounts receivable data directly to the tax authority. Hungary has a similar system. Other countries have gone through using something called a standard audit file for tax, so standard transaction listings and information sent periodically to the tax authority. So far more detail than that's contained in a standard VAT report. So the Czech Republic has that, Poland has that, Portugal was one of the first countries to introduce that. There's also kind of wider controls around things like invoicing. So some countries, before you can issue an invoice, the tax authority has to kind of approve that invoice. So Italy has that in place at the moment. If you look at a country like Brazil, Brazil's kind of one of the most kind of digitally advanced kind of tax authorities, and it's has kind of very, very onerous requirements around what you can and can't do, and kind of most things you need to kind of get pre-approval from the tax authority digitally to do those things. So what we have now at the moment for MTD can be considered to be quite light touch, but as things go on and the government needs to obviously increase yield, we do anticipate it moving in a more onerous direction. So that's where we might get to. And the thing we're going to cover next is where we currently are. Can I get the next slide, please, Sam? So in terms of MTD for VAT, there's three key parts to MTD for VAT. There's a requirement to keep digital records, so record and preserve records digitally. And there's a requirement to submit your VAT return 9 boxes to HMRC through an API link. So that is the requirements that were mandated from the 1st of April 2019. Some businesses with more complex VAT affairs were deferred for 6 months to the 1st of October, but this applied to all businesses that had a taxable turnover over the VAT registration threshold. Now, the idea behind MTD is that the full MTD journey from input of records into the system through to the final submission to HMRC, that was all done digitally, so no requirement for manual intervention. There's no transposition, cut and paste or anything like that was anticipated. What HMRC realised quite early on was that actually most businesses didn't just use a single piece of software to do their VAT return. So there was quite a number of steps to actually get information onto the VAT return. So what HMRC allowed was a soft landing period to allow businesses to get digital links in place between whichever kind of accounting packages or software they were using to produce their VAT returns and get that to HMRC. Now that's this phase at the moment is that soft landing period is going to end for all VAT registered businesses with a taxable turnover above the VAT registration threshold for all periods after the 1st of April 2021. So that in the next few weeks. It's worth also pointing out with MTD the importance of the MTD public notice. So that's public notice 722. Generally, HMRC's public notices are just an HMRC's interpretation of what the law is. Now, the MTD legislation has been drafted quite widely, giving HMRC kind of wide-ranging powers to kind of set what the legislation is, and it can do this by issuing kind of a force of law note in its public notice. So this public notice has lots of areas which are not just HMRC's interpretation of the law, but are the actual law. And it's really, really important that businesses kind of read this because there are some very, very helpful kind of concessions, legally binding concessions from HMRC in there. Next slide, please. So I just wanted to cover off exemptions. So with this current round of MTD, if you were exempt from having to file under MTD previously, you are still exempt from having to file under MTD, even with the changes coming in. So businesses that were trading below the VAT registration threshold with taxable turnover below that, they still aren't required to file under MTD. As Alastair mentioned, that's going to change from the 1st of April 2022, when all VAT registered businesses will be within the scope of MTD. There are some specific exemptions for certain businesses. So where you can't submit under MTD because of reasons of age, disability, or remoteness of location, so that there's no access to the internet where you live, then you need to apply for a specific exemption. If you're subject to insolvency procedures, you don't need to file under MTD. And if you're a member of a practicing member of a religious order, that the beliefs of that order are incompatible with using electronic communication, then you are also able to apply for exemption. This is important to mention because we do get asked quite a lot, if I'm a charity, am I exempt? If I'm partly exempt, am I exempt? And the answer is no. At the moment, if you are VAT registered and your taxable turnover is above the VAT registration threshold, then it will apply. There is a specific, business can ask for a specific direction if getting digital links in place is going to be near impossible for you, and my colleague Louise will cover that off in more detail. There is a specific direction that you can ask for, but that's kind of very limited and kind of is meant to be in exceptional circumstances. Next slide, please. So what records need to be maintained digitally? Hopefully this is just a recap. So businesses need to keep their business name, their address of their principal place of business, their VAT registration number, and any accounting schemes they do within their digital records. On the sales side, businesses need to record transactional level data. So they need to record also the time of supply, so the tax point for each transaction, the value of supply for each transaction, and the rate of VAT that applies to each transaction. And this is each transaction that goes onto a VAT return. If your transaction is outside the scope of VAT, you don't need to record that digitally through MTD. So that might be something like a VAT group where you've got intergroup supplies. Next slide, please. On the purchaser side, businesses need to record the time of supply of all of their purchases, so the tax point, the value of those supplies, and the amount of input tax that will be claimed on those supplies. Next slide, please. As I mentioned before, the MTD public notice is really, really important. There are some really kind of important changes HMRC have put into that notice to have force of law. So as part of the consultation process with business, HMRC have become aware of certain areas that are particularly problematic for businesses. So in a number of areas, they've kind of eased the burden in terms of what is required for MTD. I won't go through the full list of these, but just making you aware that it's worth looking at the notice to see where there might be an easement that might kind of help you. So kind of a typical one is kind of mixed supplies. So if you've got a supply and you don't necessarily know what the rate of VAT will be on that, you have a choice. You can either record it at no VAT rate and then make an adjustment, or you can record it at, say, standard rate and then make an adjustment, or put in a notional amount on what you think the VAT rate might be and then adjust that depending on whether your system allows you to use a non-standard tax rate. Another key one is supplies made by third parties. So if you're a landlord and you've got a management agent looking after the properties for you, doing the purchases for you, doing the sales invoicing for you, you can wait until they've provided you with an invoice before you enter that into your systems. And it's that invoice that becomes the first kind of data entry point into the MTD journey, not the individual transaction, which is quite helpful for many businesses. It's also worth pointing about again about adjustments as well. So you can still do VAT adjustments outside your VAT accounting system and your MTD journey. You'll just need to obviously make sure you put the output of that adjustment into the MTD journey. There's also for retailers as well. So there's only a requirement to record your daily gross takings in MTD. So if you're running a shop, you don't have to record every single transaction, just your daily gross takings. So it's certainly worth having a look at the notice for if there's anything that may be of benefit to you as part of your MTD digital journey. Next slide, please. And again, just a summary of kind of some of the data that needs to be kept. You need to keep a total of all of the output tax due on your sales. There's the total of acquisitions. So this is going to be less relevant for great businesses in GB, but still relevant for businesses in Northern Ireland that are still trading within the single market. There's also a requirement to kind of put in the amount of input tax the business is allowed to recover on purchases. Any kind of adjustments that need to be done via error correction, and any other adjustments that are required by law. That's a really important one because you only need to record the total of those adjustments. So if you're doing things like partial exemption, capital goods scheme adjustments, fuel scale charges, things like that, you don't necessarily need to do those in your digital software, and it doesn't necessarily form part of your digital journey. So they can still be done outside the system as long as the end product of that is put into your digital records. Next slide, please. The final thing that I wanted to cover was digital submission. So as I mentioned, there's no change to the actual information that needs to go to HMRC via an API link. It's still just the 9 boxes of the VAT return. As always, HMRC say that the businesses need to look at the wider MTD journey and think about things like whether they want to use accountancy software, which provide nudges and prompts which kind of reduce the potential risk for error and actually allow businesses to have a wider insight into their business operations. So kind of think about this wider than kind of necessarily just the specific requirements of MTD, and actually how these things might assist your business. So it's just the 9 boxes of the VAT return is still allowed to use bridging software to serve as that API link. And with that, I'm just going to hand over to Louise Phillipps, who's going to give more specific detail on what is and what isn't a digital link. Thank you.
Good morning, everyone. Thank you, Hydeam. So as Hydeam said, could I have the next slide, please, Sam? Digital links is the second phase requirement for all businesses who are within the scope of MTD for VAT, and it will apply to VAT return periods starting on or after the 1st of April this year. Some businesses may have already addressed these requirements as part of their readiness for the digital record keeping and the digital submission requirements that came in back in 2019. And as a consequence, there might be little that those businesses need to do to ensure compliance with the additional rules. However, at the other end of the spectrum, some businesses will have not yet considered what the digital links and the additional requirements will mean for them. So it's important to note that there's not by no means a one size fits all for all businesses when it comes to digital links for VAT and whether those requirements can be met. It's important that we look at each business's individual set of circumstances, the systems that they use and the processes that they have in place for preparing the VAT return to see what they need to do in order to meet the digital links requirement. What I'm going to do in my section of the presentation is to take you through what the digital links requirement is, give you some examples of what does and what does not constitute a digital link, and hopefully that will help you in determining what further work your business and organisation needs to do to ensure that you're ready for the changes that are coming in. So what HMRC require for VAT returns starting on or after the 1st of April is that businesses should have in place digital links between all parts of their functional compatible software. So that is a software programme or the set of software programmes or products that are available to record and preserve your records digitally, to provide HMRC with that information in your VAT returns from the data held in those digital records via the API platform, and to also receive information from HMRC using the API platform. So it's really important to note that at the point at which that you have entered your digital records into the system, be that software system, an accountancy software system or spreadsheet, any further transfer of data, recapture of data or modification of that data must be done using digital links. So there must be a link between each piece of software used, and that must be digitally linked to the next piece of software in the VAT return process to ensure that your digital journey is maintained. Can I have the next slide, please, Sam? So what is key is determining what actually is a digital link, and HMRC set out in their notice for MTD that a digital link is an electronic or digital transfer or exchange of data between software programs, products or applications. And this is one of the areas set out in the VAT notice that has the force of law. So it's really important to bear that in mind when you're looking at what your VAT return process is. Can I have the next slide, please? So in HMRC's guidance, whilst this list isn't exhaustive, it does provide a list of what HMRC accept as being a digital link. So that includes where you're using spreadsheets and cells are linked in the spreadsheets. So if you're going back to the source data, you want to make sure that there is there's a formula which links that to the next tab of the spreadsheet, for example, that you're using. So there is a continuous link between the values. It also includes emailing a spreadsheet which contains digital records so that the information can be imported into another software product. So say, for example, you use the services of our business services team to prepare your VAT return, and currently you email a spreadsheet giving listings of your sales and purchases activity. That emailing of the spreadsheet to then be uploaded into an accountancy system, for example, Sage or Xero, that should constitute a digital link. Similarly, if you're transferring your set of digital records via a memory stick or a flash drive for that information to then be imported into a separate software system, that should also constitute a digital link. Similarly, if you're doing any downloads which involve XML files, CSV files, if they're downloaded and exported and then imported and uploaded to other systems, that should constitute a digital link for VAT purposes. And we've also got on the list there any automated data transfer that occurs within your systems, and the API transfer. So if you're using our MHA bridging software to upload your VAT return to HMRC's site, again, that maintains the digital link at the end of the process. Can I have the next slide, please, Sam? So in terms of what is not a digital link, I think the key thing to note here is if your system currently includes the cutting and pasting of data or the copying and pasting of data to move information, say from an accountancy system download into a new spreadsheet, which you then use for compiling the VAT return figure, that is not considered to be a digital link for HMRC. Similarly, if you are preparing the VAT return and at any stage you manually rekey any data, so say for example, you've got a value showing which is £120, but actually it should be £12. If you just manually overwrite that figure, that will no longer be considered to be appropriate because the digital link would be broken. HMRC recognise, that during preparing the VAT return, and as Hydeam mentioned, there are additional calculations that need to be performed. So this could be that you need to do your capital goods scheme adjustment, you need to do road fuel scale charge adjustments, you need to do a partial exemption calculation adjustment. You are allowed to do those calculations outside of that digital journey. So you could do those in a separate spreadsheet and then re-input the result from the calculation by hand into the software, which will then link up to back into the digital journey and that process for uploading the VAT return to HMRC digitally. So they're just a few examples of what does and what does not constitute a digital link. And I think it's really important that if you haven't already done so, that you map out the end-to-end process from your sales and purchase records being entered into your software system all the way through to the point at which the VAT return is submitted to HMRC. And from that mapping process, you'll be able to identify any gaps where you undertake processes such as cutting and pasting data, copying and pasting data, or doing any of that manual rekeying. And once you've got that journey mapped out and you've identified any gaps, you can then look to see how best to address those gaps. And it may be that some of them are quite easily solvable. So an example of that may be if you've got a VAT group consisting of 3 different entities, each of them use their own accounting software to maintain their records. But then at the end of the VAT return quarter, what they do is each download a VAT return summary file from their accounting system and email that to the representative member of the VAT group as an Excel file. If that representative member of the VAT group then uses a separate spreadsheet to compile all of the information for the submission of the group return, and it copies and pastes the data that's come through from each individual company into that VAT return spreadsheet, and then uses that spreadsheet to upload the information to HMRC, by virtue of that cutting and pasting the data, the digital link is broken. So in that situation, it could quite easily be fixed by making the spreadsheets that are emailed over have a calculation in and a link to the VAT return spreadsheet. And in that case, you would maintain the digital journey through from the raw data being entered into each individual company's accounting system right through to the VAT return spreadsheet and then onward to the submission of the VAT return figures to HMRC. So just talking through and mapping through that process will help to identify where any potential risk areas would occur. Could I have the next slide?